Warren Buffett, Charlie Munger are a very famous pair that runs a
Yeah.
conglomerate, but they used to be a trio. There used to be a third person called Rick Guerin. And
Yeah.
Rick blew up in the 70s because he
Because of that.
because of he bought stocks on margin and then it got margin called and he had to sell his Berkshire stock for, I think it was like $70 a stock or something like that. Now it's like tens of thousands of dollars a stock.
Yeah.
Many years later, somebody asked Buffett, Mr. Buffett, what do you think about Rick Guerin, given the fact that he blew up and you used to be a trio, now you're a duo? And then he said something very interesting. He said that, the difference between Rick and Charlie and me is that Charlie and I were always sure that we were going to get rich. Now, if you take that statement on the face of it, that is ridiculous. Can you find any single founder of a startup right today and ask them and get them to say, I am sure 100% I will get rich? A few. Right? A few. You can look at the track record and it's like, if you can sort of look at their history and go like, certain key events had gone wrong, there was no way they would have gotten rich. Whereas with Warren Buffett and Charlie Munger, I think if you look at 100 out of 100 universes, they would have gotten rich. They were never at risk of anything, of blowing up. People also don't think about the fact that he took over a failing textile company and then he grew it into a multi-billion-dollar conglomerate. Now, you don't have to reach the levels of success that Buffett has. Obviously, somebody who has reached those levels of success are the beneficiaries of luck. But you could take that as an example of here is a method of achieving business success where even if you achieve 10% of that, you'll be set for life and you'll probably be happy with the kind of business resilience that you have and you can enjoy, which is not the case for the vast majority of entrepreneurs out there. The whole spiel here is just like, this is why sometimes intelligence doesn't matter with business. You just have to find a couple of cash generative, moat protected assets, and that will protect you for the rest of your business adventures.
Welcome to the Agaeus podcast. Buckle up. This episode is brought to you by Cards Biz, a business card too good to give away. This episode is brought to you by Better Weight for Life, transformational weight loss aid, led by U.S. board-certified physicians, providing access to GLP-1 medications like Wegovy and Zepbound that are proven to help you lose weight and keep it off.
Hello, Cedric.
Hello, Hagai.
Oh, I'm so happy that we managed to do this. So it was worth the wait. And I mean, I'll let you introduce yourself and what do you do. But I have been a paying subscriber now for years. Actually, I forgot to check, but like even since the early days, right?
Yes.
How long have you been doing what you're doing now?
I think the blog started in 2018, not the start of the year, or probably 2018 to now, right? It was 8 years, right? Wow.
I should have checked when it was, but okay, but guys, if you like anybody who's listening, anybody who's interested in entrepreneurship and operations, you can start the podcast now. Go to commonblog.com, subscribe, and then come back. And like I don't pay for that many subscriptions. I don't pay for it. So it's you, the economist, and one more. I forgot the name of it. That's Cedric Chin.
Yes.
But I tell you what, I remember very vividly. It's like, and for the life of me, I don't remember this. Years ago, I read what he wrote, and I subscribed immediately.
Whoa.
And I subscribed.
That would be
it was
interesting.
Like, really, it's just like, I have to go back. I don't remember how I got, somebody shared some article somewhere, and I said, like, this is really, really worthwhile. This is really worthwhile. And it really affected a lot of my thinking as an entrepreneur and operator. So now that I've kind of, beefed it up, like, what the heck do you do? So let's tell people, what do you do? And then we walk from there.
Sure. My name is Cedric. I used to call it a blog, but I guess you could call it a media company called Commoncog. It's a media company now because it started out as a blog, but a media company because now we produce business cases that we help entrepreneurs not get surprised when things happen. Because as you well know, business is not like many other domains. In most other domains, you weightlifting, swimming, you learn the techniques and then things doesn't change and then you get better. But in business, there are 10-year floods. You might be working in a valley and then there's a 10-year flood and then everybody in the valley dies. And there are shifts, as you well know, because AI is happening. It's the third year of the AI shift, right? Everything changes. So Commoncog, if you go to Commoncog now, there's a syllabus. So you can go there and learn about business. We do is that we also produce lots of cases. And what we found is that we can go talk about like the approach, the pedagogical approach that we figured out that's actually developed by the US developed for and funded by the US military to accelerate expertise. We take that pedagogy, we apply it to business. And basically, if you look at lots of cases, you don't read it for lessons, but you read it for fragments, concept instantiations. You become better at dealing with situations nobody else has seen before. And obviously, we'll get into that over the course of this podcast. But I think the question you wanted to ask is like, how did we end up in this situation where I'm running a blog or running a media company, basically?
And I want to interject, and I don't know if you would agree, but like there's a lot of good writers out there, and a lot of academicians right there. But I think what's very interesting about what you write and the way you write, you have a good balance of, for lack of a better word, academic element and somebody who's also who's actually has done work and understands like business and operations to some extent, because sometimes like the best operators are not necessarily good writers, and biggest writers or professors are not necessarily operators, but like a lot of the work that comes out from your company is like, I think, is a very good balance between those two things. But and I think that very interesting, like how did you get to
this point?
Yeah.
This is a really weird company. I think a friend was telling me that I was basically doing business research in the wild. So I grew up in Kuching, which is a tiny city on the island of Borneo. I'm Malaysian, and I went to university in Singapore. And since I think I was 15 years old, I always knew that I wanted to start my own business. So I did a computer science degree in Singapore, and I had a tuition grant, which is basically, Singapore is very smart. It has this deal where when you get a 40% discount on your university degree, and in exchange, you either have to work in Singapore for 3 years for any company, or you work for a Singapore registered company anywhere in the world. And because I knew I wanted to be an entrepreneur and I had this tuition grant thing hanging over my head, I decided to go and try my luck in finding work in a business registered in Singapore, a Singaporean company, but elsewhere in the region or in the world. And I found this guy who had a consulting company, outsourcing company based in Vietnam. And he basically hired me to be the country head. And I purposely chose this because that was the only way I could be put in a position of basically being a business operator as opposed to be like a lowly software engineer where you only learn very little. And I could have this experience straight out of university so that when my grant expired at the end of 3 years, I could go off and do my own thing. And I got lucky. This guy is a good entrepreneur. He hired me to free him up so that he could pivot the company. Because as an outsourcing company, there's only so much leverage you can get out of the business. You're always trying to trade time for dollars, right? So you had a bunch of software engineers. I came in, I was a fresh CS grad. I was good enough at managing people. And I took over the business for about a year, handling the outsourcing business, finding clients. So he could take a step back and think about like, hey, how do we escape this rut that we're in? We're trapped here as a services company. And he figured out that he could go during this period where he decompressed. He was probably burnt out, looking back on it. And we pivoted the company to a point of sale software business. Well, software first, but then we also bought our own hardware from Taiwan, from China. And then we sold the hardware and the software to mostly businesses in Singapore. And it was very clear within the first month or two that what we were making in 1 month, it was what we used to make in 6 months as an outsourcing company. So we had hit on real demand due to a niche in the market. And very quickly after that, we grew the revenue from zero. I managed to shut down the remaining bits of the outsourcing company, and we grew the business together over the next 3 years. 2.5 years to 4.5 million in annual revenue. And this was with completely bootstrapped, no external funding, we ate what we killed. And that was a remarkable experience. And at the end of it, because I had negotiated 5% of the company, he bought the 5% back from me. And then I went off to do my own thing, right? I was like, he wanted me to stay on, of course, because we had grown the company well together. And I said, no, I want what you have, right? You're happy. You found your thing. Anyway, like the story had a happy ending. I mean, it was like really hard to build the business. But last year, the company got acquired by Ant Financial, Ant Group, for a hefty sum. And my boss is basically retired now. So it was a very fun journey together. And so when I left the business, and this was end of 2017, start of 2018, I knew that I don't know what business company that I wanted to start, but I had a few things in mind. I knew that I didn't want to do a startup because we can get into that in a bit, right? But I was very affected by the bootstrap experience. I went and did, I guess you call it an incubation program called Entrepreneur First, and I wasn't particularly impressed with that. And the other thing that I realized was that I sucked at sales and I sucked at marketing. And it was likely that I was going to fail if I didn't learn one of those two skills. So I decided to pick marketing, and I started a blog to learn content marketing, right? To try to figure out like what does marketing mean. And shortly after that, because Commoncog was starting to get attention, a man who was running a software as a service company reached out to me in Ho Chi Minh City, where I was based out of. So I was flying between Singapore and Ho Chi Minh City to save costs because living in Ho Chi Minh
Yeah.
City is really quite cheaper than Singapore. And he reached out to me because he had a software as a service company and he needed a marketing person. So I did fractional marketing for him.
Yeah.
And 2 years later, I said, the content marketing I'm doing for you is good, but it's not moving the needle. And so let me reposition your company. And I built enough trust with him at the time that he was willing to let me do that. And we executed that program, I think, over 4 months. And then I left the company, and 8 months. So after the thing was finished, I left. And over the subsequent 8 months, with no additional marketing spend, they doubled their annual recurring revenue by 7 figures. So due to the repositioning. And so then
Amazing.
at that point, it's like,
Yeah.
at that point, I knew that I had good enough marketing skills. And so and roughly around that time, around COVID, a business mentor reached out to me and said, hey, what you're doing, what you're writing is amazing. Do you know that this is a thing called Substack where people are making a lot of money because of COVID? You should turn on and monetize your writing. And I was like, I didn't know anything about monetization. Didn't realize that Substack was ongoing. The Substack revolution was happening. So I turned it on, and before I knew it, Commoncog could be self-sustainable. I could sustain my lifestyle in expensive Singapore based purely off the recurring revenue of Commoncog. And so, I just I just improvised my way into this situation where Commoncog's revenues are enough to support me and mine, even though Singapore is really expensive. The structure allows me to do random business experiments. So I can do consulting if I wish. I did a consulting engagement with Colin Breyer, who was the second shadow of Jeff Bezos at Amazon. And I learned how to be data-driven from him. I explicated that on a long series on Commoncog called Becoming Data-Driven, right, as a business operator. And that was an interesting adventure. I know you followed along because there's very few places where you know how to run a Amazon style weekly business review where you look at 400 to 500 metrics.
So for people who don't know what it is.
Yeah. Right.
Not everybody knows what it is.
Yeah. It's just an example of a consulting engagement where I could learn something about business that was not really well known. And so Amazon has this practice where every Wednesday morning, everybody who is important in the company sits together and goes through 400 to 500 business metrics in 1 hour. And of course, when you hear about this,
insane.
you're like,
I know, like,
how?
That's insane.
Yeah.
It's like when you wrote about it, I read it, and also the Walking Backwards book. But it's like, again, I feel so humbled.
It's insane. It's like, no wonder they can run such a complex business with so many moving parts, right? Because they have Colin called it management technology. They develop new management technology, and it really is a secret weapon. So of course, when somebody reaches out to you and say, hey, do you want to help explicate this, turn this into like understandable training and writing for my clients? You say yes.
Yes.
And then there's also like other business experiments that I could run, right? With Commoncog sort of throwing up this subscription revenue. So what the structure that you're talking about that is sort of weird is that I can write from practice. I can experiment with businesses, either my own businesses. Sometimes we start things that I don't write about and it fails. And sometimes I do write about like what did I learn from that experience. In the case of the Amazon WBI, I applied it to Commoncog first before I started writing about it. So you could get like actual gritty information about what it's like to put that complex thing into practice. And it gives me the optionality of figuring out like what kind of business adventures I want to go on, and it gives me fuel to write. But the interesting thing about Commoncog now is that I am starting to hit the limit of what I can put to practice and what I can write about, because as I become more skilled,
what do you mean by that?
Well, as I become more skilled, and like for example, some of the data-driven stuff, right? I have done work for large venture-funded companies. I have also done work for free, just as a lark, for a public billion-dollar company. Well, I gave advice. I didn't really work, but I wanted to see what the ideas would do if in a large business context. I can't write about those, right? And so as I get more and more skilled, and the business problems that I'm capable of tackling and solving become more and more valuable, it becomes harder and harder to write about them. Like, for example, what we did when we repositioned the software as a services company, because it was a 7-figure increase. Still, I think I can write about it now, but it's been how many years since that happened, right? 2021 was when I did it.
You
It's
mean
now
in terms
5
of
years.
client
Yes.
confidentiality?
Yes.
Okay, now I
Yes.
understand.
I can only write about it when it's no longer useful to competitors.
Yeah.
About 2 years ago, I needed to shift Commoncog from that model where I went off and did experiments and I wrote about it with some lag, to a model now where we commission cases and we produce business cases to help people like you, people, operators reading, right? To expand the set of cases, situations they can recognize in their own businesses. Because otherwise you're too busy executing. You're not actually looking up and saying, oh, actually, this looks like a 10-year flood is going to hit and I should prepare for that.
Yeah.
Anyway, so that's the long story of how Commoncog got to this place. And it's a very interesting group of people who read it. There's a lot of execs, quite a bit of operators, but also some investors, quite a number of investors, both from private equity and from VC, and some hedge fund folks. Actually, mostly hedge fund and private equity, I think. Few VCs, I think, read Commoncog.
And how you explain that?
How do I explain that? I think actually that in order to, you don't have to be very thoughtful as a VC to succeed, right? You just have to have very good deal flow. So I think you've done a podcast interview with Jerry Newman. Jerry is obviously an exception to that rule, and that's why I love him. I love listening to him. I love reading his stuff, but you have to be more thoughtful, I think, as a private equity person or as a public equities person, right? Because you're dealing with businesses over very long time scales, and access is less of an issue in both of those situations as compared to VC.
So you said, like, you're saying you're more likely to be intellectual compared to VC.
Yes.
That's how we're bad mouthing the VCs right now.
But it's true, right? The important thing when you're a VC is you need to have access, and you need to have what did Michael Mauboussin call it? There was a stickiness of returns, because if you are a good like, there's two stories that I like about this. One is Bill Gurley. Well, I think when he was a young VC, he asked a famous VC, like, how do you become a successful VC? And he said, oh, the way to become a successful VC is to be a successful VC, because then everybody wants to get funded by you, right? And then Michael Mauboussin, who was Bill Gurley's good friend,
right? Everybody wants to be funded by you, and then people want,
yes, it's a virtuous cycle. And then, of course, Bill Gurley joined Benchmark, which is like this legendary firm. And then Michael Mauboussin, who is Bill Gurley's good friend, has this thing where he puts out a paper going like the stickiness of returns. VC is one form of investing where there's incredibly sticky returns, because the famous rich firms continue to get famous and rich. So yeah, it's a different dynamic. And, as is true in business, you don't actually have to be intelligent or thoughtful in business. It depends on the setup, right? You just have to find the right setup, and then the high order bit might be that you just are structurally advantaged in some way, and then you don't have to think very hard. You're just gonna make money.
And I'll say it even for personal experience. I outsmarted myself so many times out of success. Like, because sometimes you're being too because sometimes because I think sometimes you're trying to intellectually solve something instead of just doing the work. Like, you're trying, like, okay, let me say something. So let's say a certain marketing approach works, right? A certain marketing approach works, right? You can stop and say, hey, why is it working? Or you can just like double down, right? And you could just double down.
Yes.
You can just double down, right?
Yes.
And it's like and then figure it out, right? It's like, okay, I know, supposedly Bruce Lee says, take what's useful and disregard the rest, kind of things like that. But I think if like, sometimes you try to be a little too much intellectual, right? And like you could say this, like, good marketing people, good salespeople, not all of them are like, it's not, God forbid, I'm not saying stupid or something like that. It's just something like, it's like more like, it's like, hey, this is working. Like, I'm going to do it. Like, is it because it's a mega trend, right? Is it because there's a bubble? Is it because, like, sometimes it doesn't matter, right? It does matter. Now, you can be an outlier if you're both practical and smart. Like, we talked about Charlie Munger. I have a little obsession with them. I don't know if you can see all those books on this side of things. And everything like that. So, like, it's like, if you look at Buffett, if you look at Charlie Munger, it's like they were, again, my interpretation, right? The grade A intellects putting the grade A intellect to B-level challenges, right? The whole conversations of the whole conversation, I look for low bars. They keep saying I look for bars I can just like put my legs over. It's like, so like if like you are a grade A, if you're a grade A intellect and you're taking grade A challenges and you succeed, that's amazing. But if you're grade A intellect and you're taking like D-level challenges, okay, if it's like, value investment, it's like I can't lose, right? Or my chance of losing, it's like somebody who can be very successful, and then you can be you can be a big grade intellect, you can be a C grade intellect if your challenges are D grade, right? Now that can come from different ways, because you figured something out, because you're on a boom, because in the right time in the right place, because you're like, it doesn't matter. It doesn't matter, right?
This is really a really interesting question.
Yeah.
I think we just finished a deeply unpopular series in Commoncog last year, which is the Asian Tycoon series, and the
Which I
conclusion
loved. I don't understand that. I loved that.
Well, I think most Western-oriented, Western-looking people are not super interested in the dynamics of Asian conglomerates.
Yes.
Especially given that the AI boom is ongoing.
Yeah. No, maybe there's more people. Yeah, sorry, please.
No, I was going to say, like, I continued on that because it was something close to my heart, and I wanted to finish what I've discovered, because it took me many years to figure out like how these businesses work and how these business people became successful. But from a business perspective, it was not a wise decision from Commoncog, because basically Commoncog didn't grow. I mean, it's a complex thing. There are multiple other reasons why Commoncog did not grow, but one of them was that I continued to publish on Asian Tycoons until I was satisfied that we had figured out, or I already figured it out, but I wanted everybody to have this felt sense of this is what business feels like when there's no rule of law, when you're building it slowly, there's no venture capital.
Yes. Like, I know what it is, you know what it is, but the people listening knows it. So hopefully other people would see the light and understand it's a brilliant series. So let's say what it is, and you know what? Allow me one comment before. So and again, I'm gonna put words in your mouth, and you can hit me and like tell me to fuck off if I'm totally wrong. It's things like that. But it's like I think there's a Western bias, right? In many ways, because Silicon Valley is very successful. Let's take that in case. Like Warren Buffett is very famous. Like and that's where a lot of models are created, and rightly so. There's no question the Western economic world is overall very successful. The U.S. is overall very successful, but there's narratives, there's models, there's stories that are built, and then not only are they learned, they're taken as gospel to some extent. And I don't know. It's like I don't know where it's like. Again, I don't remember where I read it. Maybe you even wrote about it to some extent, but in a way, it's like Chinese entrepreneurs study Silicon Valley. It's like very few Silicon Valley entrepreneurs study what's happening in China, and things are happening in China, right?
Yes,
like things are happening and happen in China.
Incredible
right?
things.
Incredible things. Right? So it's by the way, it's another example of like being too smart, right? Because you're being too smart in a certain way, in my view. It's like the things. So, and one of the things that I found really interesting is somebody that has lived both in the States, both in Israel, both traveled abroad, worked in emerging countries, or whatever you want to call it, and things like that. You understand that the world is a lot bigger than the capitalistic low structured economics of the U.S. of the U.S. The things like that. And those are things like that. And you can be very successful in the U.S. working the U.S. without knowing this. But the second you want to go abroad, you better get your head around this. So that's what I find fascinating. Again, Warren Buffett, we keep saying it is impressive. Elon Musk is impressive. But anybody that gets to that level of stuff in Asia, if I had my hat on, I would take it off twice.
Well, so this is a very rich topic, and I want to also tie it back to what we were just talking about, like being too smart for yourself, right? But okay, let me make the pitch first before I link it back to that, too smart. The purpose of the Asian Tycoon, the Asian Conglomerate series, was that me, as a person who grew up in Malaysia, who went to university in Singapore, who was embedded in this world, the large companies in Asia are all conglomerates. Doesn't matter if you're talking about the chaebols in Korea. It doesn't matter if you're talking about the zaibatsus in Japan. Was it zaibatsu or kairetsu? I always mix the two up. One exists, one is the newer form. Anyway, and then there's conglomerates in Malaysia, in Singapore, in China, in Hong Kong, in Taiwan, right? All across Asia. India as well. We touched on India a bit in the series. Actually, quite a bit. They're all conglomerates. They're all freaking conglomerates. there was this narrative that I grew up in because when I was a teenager, I started reading Paul Graham, and then Paul Graham started Y Combinator when I was a teenager, and somehow I follow along all along from I think age 17 onwards it was. Uh, we have at this point a narrative that if you want to build a large company, it has to be a startup. It has to raise venture capital, right? And a startup is a company that grows fast. And here I was seeing all of these counterexamples around me. They didn't take venture capital. They didn't grow fast. They are generational wealth. This is like, in some cases now 3 generations. And the Western world has a taste of it where when you watch Crazy Rich Asians, a lot of these families depicted there are 3rd generation, 2nd generation Asian business people of these conglomerates, right? Of course, the movie doesn't have anything to do with how they made their money. It's all about how they spend their money. So if you stop and think and take a step back and go like, if the only way to build a big company is through venture capital and startups, which by the way, the venture capitalists want you to believe, then why are there so many counterexamples? And it's not just in Asia. In Europe, there are a lot of conglomerates that are run in this way. In the US, in a forgotten time, in a time before, in the 60s, the dominant form of the successful business was a conglomerate. There was the conglomerate boom and bust. And before that, in the time of Rockefeller's company was basically almost conglomerate, like old pipelines. It was expanding, but it was constrained by the spirit of America, by the fact that there was antitrust law, right? So the whole point of the series was that I grew up in this environment, and there's a huge canon of logic of how to get rich through startups, right? And the secret answer is like you have to try enough times until you get lucky. What's the explanation for how to get rich as an Asian tycoon? And that is the point of the series. And at the end of the series, right, you probably know this, the revelation, the reveal at the end of the series is that this is actually a very old universal way to get rich. And if you know how to look, the Mars family, for example, in the US, or the Wallenbergs in Europe, right, they got rich in the exact same way, and they are still rich. And in some cases, they are 3rd, 4th, 5th generation, and they're secretly just printing cash. And the core structure is very simple. You need to find 1 or 2 or 3 businesses that are moat protected. That means that they are defensible against competition. Nobody can really compete with them, and they throw off cash. And because they throw off cash and they're impregnable, right? So an example of this would be Robert Kwok's initial monopoly was he had a monopoly over the sugar. He was basically Malaysia's sole sugar supplier, and the cash flows from that business could power his entry into hotels, the Shangri-La hotels, shipping, property development. Now he's getting into data centers well, it's not him, it's his grandson probably, getting into data centers in Asia. And the core thing is that if you have some businesses in your conglomerate that are moat protected, either because you have a government granted monopoly, which in the case of Asia is probably due to corruption or, being friendly with the right political figures, you can then
all of them together.
You can take the cash out of the business and you can make as many business mistakes as you want. It doesn't matter you spend it on stupid ideas that you have to close down 10 years later after like being in the red bleeding for 10 years. It doesn't matter because your core cash cows are constantly throwing off cash. And once you see this, you start to realize that this is the same all across the world, right? Why is the Mars family so wealthy? Because they have a chocolate business is throwing off cash. More importantly, they have a pet food business which actually draws off more cash than the chocolate business. So the Mars company for items and Mars bars. What you don't know is that they also own Whiskers and Pedigree, and those actually make more money. Those are growth businesses. And this cash that they throw off allows them to do crazy things. Like, for example, the Mars company, I believe, are buying pet clinics because pets are a growing market in the world. More people are having less kids and having more pets.
More pets.
And so, and so therefore, if they can control the distribution, they can increase. Anyway, the point is, once you get the pattern, and the pattern is slowly unveiled over the course of the series through many, many case studies of many, many tycoons across different countries, different time periods, right? You begin to realize that, actually there is a path here to get rich that people don't talk about. And the reason why they don't talk about it is because nobody gets rich if you get rich in this way, only you. Whereas the VC path is very well talked about because VCs have a vested interest in spreading, here's the way to build a big business because they get to share in the wealth creation. But if you go down the tycoon path, and by the way, Warren Buffett arguably has gone down the tycoon path more.
That's what it is. That's what it is. Insurance company throws the cash, has the flow, deploy capital.
Yes. And so he basically he gets to live his life how he wants. He gets to do business with the people that only he wants to do business with. Nice people, not bad people, right? And then he basically cannot fail because there are too many businesses that are too moat protected, that are all throwing off cash, that if one fails, another thing is still throwing off cash. It doesn't matter, right? It's resilient to business failure, as opposed to like, some startup stories where you're like, oh, we have to like raise a lot of money, and if we fail, we don't hit the next milestone, we have to shut down. And you're like, okay, but that's just one way of doing business, and it's a way that, okay, so we're going off all over. We're in so many directions, but one of the things, and this is my bugbear, and this is a thing that I have said in the Commoncog forums in response to this series, is that, Warren Buffett, Charlie Munger are a very famous pair, right, that runs a
Yeah.
conglomerate. But they used to be a trio. They used to be a third person called Rick Guerin. And Rick blew up in the 70s because he
Because of that.
accidentally, yes, because of he bought stocks on margin, and then it got margin called, and he had to sell his Berkshire stock for, I think it was like, what, $70 a stock or something like that. Now it's like tens of thousands of dollars a stock. Crazy. And many years later, somebody asked Buffett, hey, Mr. Buffett, what do you think about Rick? What do you think about Rick Guerin, given the fact that he blew up and you used to be a trio, now you're a duo? And then he said something very interesting. He said that, the difference between Rick and Charlie and me is that Charlie and I were always sure that we were going to get rich. Now, if you take that statement on the face of it, that is ridiculous. Can you find any single founder of a startup right today and ask them and get them to say, I am sure 100% I will get rich? No. A few, right? A few, right? And then you look at you can look at the track record, and it's like, if you can sort of look at their history and go like, if certain key events had gone wrong, there was no way they would have gotten rich. Whereas with Warren Buffett and Charlie Munger, I think if you look at 100 out of 100 universes, they would have gotten rich, because how could they not? They were never at risk of anything, of blowing up, right? And people also don't think about the fact that he took over a failing textile company
with
that
negative
was
capital.
Yes. And then he grew it into a multi-billion-dollar conglomerate, right? Now, you don't have to reach the levels of success that Buffett has. Obviously, somebody who has reached those levels of success are the beneficiaries of luck, right? But you could take that as an example of, here is a method of achieving business success where even if you achieve 10% of that, you'll be set for life, and you'll probably be happy with the kind of business resilience that you have and you can enjoy, which is not the case for the vast majority of entrepreneurs out there. Anyway, the whole spiel here is just like, this is why sometimes intelligence doesn't matter with business. You just have to find a couple of cash generative moat protected assets, and that will protect you for the rest of your business adventures. However, to respond to your point about like, you don't want to be too smart for yourself, I think over the course of the entire series, while it is true that certain business people are successful even though they're not very thoughtful, and they're probably not super intellectual, they just stumbled on the right moat protected cash generative asset early on in their careers, and that set them for life, right? Even with that, the ones that, and you can tell my bias here, the ones that I think are more remarkable, who are able to expand into more interesting businesses, were the more thoughtful ones. Robert Kwok was exceptionally thoughtful. Yes,
definitely. I'll tell you, and maybe I'll add to what you say, and this is from like what I see. I think the difference between, so again, we keep coming back to Warren Buffett and Charlie Munger. I think, again, I've been reading him for 20 years or something like that. They also said in something like that, like, we're happy getting rich slowly, right? We're getting rich slowly, right? So that's another element of it. But I think what people may not understand in business, I think, you can be successful in business doing a few things right. And in startup, you have to do everything right. You have to get almost everything. No, not everything, but you have to get like almost everything right. Everything right. Because you're sitting on a lot more leverage. Equity leverage, mind you, equity leverage, not necessarily debt leverage, but you are sitting a lot more leverage, right? You're raising capital. You're raising, like, I'm into the classical. You're raising capital. It's good for the next 18 months. The market opportunities might be good for the next year. Like, you have to get the product right. You have to get the people right. You have to get the marketing right. You have to get AI right. Whatever it is, like, there's all those things you have to get right. Of course, if you get one thing right more than the other, and it's a trifecta and an amazing situation, you have a little more time. But you really have to get a lot of things right.
Yeah.
And if you're like I don't know, selling cars, I don't know, things, and you're just good at sales, right? You would be okay. You might not be exceptional in the sense that you will be the best dealership in the world, but you might be able to get like a very, very decent business.
Yeah. I think you see this a lot in the short term with like online entrepreneurs. So they succeed, they grind, right? And then it
Yeah.
stops working after a while because everything stops working after a while, right? And then they're lost. And then they're lost. And then
Yeah.
that's where you can tell like this is not a very skilled person. He may be rich. Maybe he rides the wave for 10 years because business waves tend to be like around a decade, or slightly over a decade to a decade.
Yeah.
And he gets exceptionally, he's well off, but then he can't do anything else after that. He's like, he sold off the tasting or he's wind down his thing, he sits on his millions, and then he can't do the next thing. And maybe that's okay. If he's honest with himself, he's willing to look himself in the mirror and say that, I had a good run, I was not particularly skilled, and I'm good, I can hang up my hat. But most people are not like that. And also the people that we lionize as skilled business people tend to not be like that as well. And I would wager, again, it depends on your goal. If your goal is to make money and be rich and retire, right? More power to you. But if your goal is to be admired by fellow men, always a dangerous thing. The Greeks have warned us against this. Yes, correct. Yes. And so maybe it's the better thing actually is you just want to make money, you make money, and then you go home, and who cares how you make your money, right? But the people we admire,
I know,
are the more skilled ones.
But and again, I speak as like I was of a fantasy. Like I can tell you, like, I was like I'm trying to like give a few like real examples like this. Like, I have learned over time. It's a lot more important to figure out what works. And again, I'm talking like be moral, right? Stay within the rule of law.
Yes, of course.
Things like that. Like I do believe in infinity games. Like today, I talk to people I had contact 20 years ago, and they remember me fondly, right? Even though we didn't talk and we're doing something or helping out or they're helping out and things like that. And I really think that's worthwhile. But but it's like if I think it's really difficult to have your sense of self-worth dependent on external and the admiration of your fellow man is a fickle thing.
Very fickle. Incredibly fickle.
Now, this said, being able to learn and execute, if you can do that together, amazing. And I think that's a good thing to desire.
One of the things that I've learned a lot, especially over the last 3 years, and I should credit the person who taught me this. There's this famous investor called Graham Duncan, and he actually pushed me in this direction.
Yeah.
He's a Commoncog member. He was like, he's very good at understanding people, and he said that he got good because he studied a lot of different personality tests, and he used the personality tests in a way as scaffolding on which you can hang fragments of people that you've met, right? So you can very easily meet a person and like do rapid case comparison with all the people you've met before and ask, oh, is this person like this or this? And one of the things that I learned from him, because he said that the most useful personality test that he used was something called the Enneagram, which organizes you based on your deepest fear and sort of says that your personality, your pattern of behavior is basically what you default to take in response to and to compensate for your deepest fear, right? And there are only 9 deepest fears. And it's a very old personality test, like descended from wisdom traditions. It's a bit woo, but the core idea, I believe, is correct. Many people do different things. So many different people do the same things for different reasons. So there are business people who you can tell who they're doing it because they want the admiration of their fellow man. There are also business people who do things because they cannot stand working for other people, right?
Yeah.
And they just want to be their own boss because they can't take it when they have to deal with the idiocy of other people. There are also other people, business people, who want to do business and they want to do it in a beautiful way. They want to do it in the right way. And this is the thing that can lead you to scrub-like behavior, which is like, are you playing to win the game or are you playing to, a made-up version of your game where you want to play beautifully and you want to win? And then there are also people who... So, by the way, Charlie Munger is that. He is a type 1, which means that he's driven to want to be moral and do the right thing the right way. And the reason why many people admire him is because he has managed to live a virtuous life while doing business and do good business with good people and have he calls it a seamless web of deserved trust, as you well know. Warren Buffett is built differently. He's more of a type 5, which is that, so the core fear of a type 5 is that you feel helpless. And the way that you compensate for that is that you learn a lot. You just think that, I just need to learn a bit more and I'll feel...
more I know.
Yes. Yeah. But you can tell, like, Warren Buffett, he's playing the game because he loves business and investing. It's his way of like learning a lot, and then he feels helpful because then he can become rich and like, then he feels safe. So to sort of answer your question, the older I get, the more I realize that different people do the same things, but for very different reasons. And if you're a seeder like Graham Duncan, he used to be one of Wall Street's best seeders. I don't know if he's still doing that role. A seeder here means that he helps, if you're a good investor, he helps you start a hedge fund. He helps seed hedge funds. It's very helpful to know what kind of people you're dealing with. And I didn't know that was possible until I talked to him and heard about some of the things that he was able to do. But there are people like that who are very good at reading people. Anyway, I don't know where this conversation is going. I've gone on another rabbit hole.
We started with Asian tycoons, and we got into our deepest feels. So I do want to go back to subject matter you said in the beginning, because a lot of the work is based on accelerated learning, and I think it's a fascinating subject matter. Let's talk a little about what is accelerated learnings, and where does it come from, and how did it shape kind of how you approach business analysis? Yeah.
So I've learned a few things about accelerated learning in just the last 6 months. Was it the last 6 months? Because my daughter was born 7 months ago. Actually, maybe the last.
You can't remember stuff. You can't expect it to be.
No, but I think it was because I learned this many years ago. Okay, wait. Let me start from the top.
Yeah, from the beginning. Yeah.
But the pitch that I'm going to make is that I've learned new things that I've not written about. So your podcast is going to be the first place that I'm going to articulate this in public. Yes. It's really cool. And it's actually really hard-won because I learned about these concepts years ago, but only now can I understand it and put it to practice and articulate. Okay, let's start from the beginning. I wanted to get good at business quickly. And during my time working on the point of sale company, we were successful, but we had many other counterparties who were traditional Chinese businessmen, the stereotype of uneducated, never went to business school, super amazing at business, would run circles around us in business deals, right? And I wanted to know how to get as good as them quickly. And of course, if you go online and you search for how to get good at things fast, you will get something. You probably will Google and find deliberate practice. And then you will try to put deliberate practice to work, because deliberate practice is widely agreed to be the gold standard for how do you get good at something fast, how do you build expertise quickly, and you will fail. You will absolutely fail. If you actually seriously try to apply deliberate practice, you will realize that it does not apply to messy domains like business, like investing, like interpersonal relationships. It doesn't apply to like getting good at being a good husband or finding dates, because you can tell that there are some people who are better at finding dates than others, right? But you can't deliberate practice anyway. And the key problem was that deliberate practice assumes that there is a hierarchical skill domain that people have worked out, where you have low-level skills and you have high-level skills, and you have a syllabus that you can build from the low-level skills up to the high-level skills. But if nobody has come in and done that for your domain, or your domain is constantly changing, like in business and investing, then it doesn't work. Now, for many years, I sort of given up after this sort of like searching a bit, trying to put it to practice, doesn't work. And then one day, I was listening to this talk that Daniel Kahneman was giving, the famous psychologist, right? Thinking Fast and Slow, the famous book. And he sort of said that he had an adversarial collaboration, his most productive adversarial collaboration, with an applied psychologist by the name of Gary Klein, who is the founder of this field called naturalistic decision making. And what they specialize in was the detection of expert intuition, or like expertise and expert intuition, and in what scenarios can expert intuition work. And I was like, wait, is this the terminology that I've been looking for? Is this the field that tells you how to get good expertise quickly? And so I went and found Gary's first book. And in that book, Sources of Power, Gary tells the story of how he came to start naturalistic decision making. It was from a grant by the US military. And it turns out that over the last 30 years, there is this whole field of research built around accelerated expertise that you don't hear about because it's primarily used in military and industrial contexts. It is funded by the US military or the UK military, like all the various militaries of the Western world. And it tells you how to accelerate expertise. And it is like nothing that you would read in the traditional deliberate practice or traditional mainstream education literature. And the reason, wait, yes, you want to say something?
One studies grad students, psychology students in the university and does experiments on them, and the other studies the warriors in the field but get shot at. And it's kind of different.
Yes. People who might die, but also firefighters, policemen, surgeons, people in real world domains where there's real stakes. If the patient dies, the patient dies. If the soldier dies, the soldier dies. If the Marine fire squad commander makes the wrong decision, the entire Marine squad dies, right? So the field of research is incredibly rich with insights on how to get good fast. And they are, for the sake of this audience, so that we don't go too much of a rabbit hole, the key idea in naturalistic decision making is that it is possible to extract tacit knowledge from the heads of experts and turn it into training programs. And they have developed techniques over the last 30 years to be able to do that. And one of the things that they grapple with, because I'm sure everybody has experience where you talk to an expert and it's like, how do you know what to do? And I was like, I just knew. I just looked at the situation, like the deal was structured like this, and I knew that this would be the most likely way to achieve my outcomes and to align all the incentives. And you're like, what the hell? How do you, what? Right? And so there is a book called Accelerated Expertise. I do not recommend that you read it because it's incredibly academic. Instead, you should just read Commoncog's treatment of it because it's more applied to business. There are two key theories that explain why these experts are able to do what they do and how you can also use these theories to accelerate your own expertise. The first one is, I think, easier to understand. The first one is simply just experts are able to recognize cues in a situation that novices are not able to recognize. And the key is extracting what those cues are and what relationships and connections that they're seeing, and then forming a training program so that a novice going through the training program can recognize and see the same things that the expert is doing. And this sounds very simple, but it is quite rich and quite deep. It is not easy. And recently, I realized that they have an entire theory that explains how experts are able to sense make the situation that they're looking at. And it's called the data frame theory of sense making. And it's very simple. It's just like, when you're looking at a situation, you need a frame, a story to make sense of the thing that you're looking at. If you don't have a story, you don't know what you're looking at. So if you take a novice rock climber and they look at a cliff, right? They're just going to see a cliff. You take an expert rock climber and you get them to look at a cliff, they see a whole bunch of affordances, things that they can use with certain techniques to climb, right? Similarly, you had a novice balance sheet with the three financial statements, the balance sheet, cash flow statement, and the income statement. They just see a bunch of numbers. Maybe they can say, oh, the profit is like this, You had Warren Buffett, the same three things. He's going to spot different things. Exactly. And so the core problem of accelerated expertise is, can I give you the frame, data frame? Data only is, humans only construct data within the context of a frame, and a frame is a story that organizes the data that they're looking at, organizing the cues and what things imply. If I can teach you that frame, if I can extract it from the heads of experts and figure out what the frame they're constructing are, what the causal relationships between the data points that they're looking at, and I can give that to you as a novice, we have half the battle done. Because imagine, okay, so let's not use the balance sheet example, even though I'm sure that your audience is primarily business people. If we use the rock climbing example, if we can get the novice rock climber to see the rock face the same way an expert rock climber sees it, immediately they know the trial and error they need to do. They say that there's this hold requires this technique, rock climbing technique to do. I cannot do that yet. I need to go and acquire that skill. So if I can teach a novice to see the same frames as an expert, the novice is now self-empowered to go out and get the skills necessary to perform at the same level. And so this is the secret at the heart of all of NDM's training programs. If I teach you to see like the experts, I have half the battle done. And of course, they will do a bit more than that, all right? They will do they will teach you some of the skills so that you can exploit the things that you're seeing. But just getting you to see like an expert is half the battle. And more importantly than that, right? If I can get you to see like an expert, then you can sense make new situations like an expert. And so now I'm also training you to deal with new situations that nobody has seen before on the battlefield in business, because AI is changing things live, right? And an expert business person will do better than a novice business person because they're able to construct better frames.
And they have a judgment.
Yes.
They have a judgment frame.
No, but what is judgment? Judgment is the ability to construct new frames from fragments of cases that they've seen before. So Commoncog, now it sort of makes sense why Commoncog produces all these cases, right? We're trying to give you lots of fragments of cases of various business situations and concepts, so that when you're encountering a unique situation, and in business it's always unique, your business context, the country you're in, the industry you're in, the time that you're in, your competitive side is always unique. When you have enough fragments, you can construct a frame that your competitors cannot, that you yourself might not be able to if you did not go through this training process. And so that's basically it.
But the question is, how do you do that, right?
Right.
So like,
okay.
How do you do that? Like, it's also like, it sounds wonderful, right? But how do you actually do that?
Yes. So This is something that I only learned recently. So there's a Commoncog blog post that you can go read called our first accelerated expertise training program. So before this Commoncog, we just produced the cases, but now I realized we need something more. What we need to do is we need to give, and we did this in a course. So I ran a course. Commoncog has only run 2 courses ever, and it was like sort of my business experiment to try to put these theories to practice. And it was about entrepreneurship. It was about, how to think more entrepreneurially, to see reality like an entrepreneur would. And only in the second cohort, which we ran in January this year, just a couple months ago, did we realize that you have to do this. So the way that you get good at this is, first I give you a scenario, right? And then I say, make sense of it. Sense make. I give you some questions and ask you to reflect. And you don't even have to give me your reflection. You can record the reflection on a voice note on your phone to yourself. The point is that you need to articulate it out loud so that you can have a record of your sense making. And then I show you what an expert sees and the affordances that the expert sees, the actions that they can take, the cues that they notice, the information that they want to go and explore further, right? The questions that they ask. And then I ask you to compare the expert's sense making with your sense making. And then we rinse and repeat 10 to 20 cases, a minimum 10 cases, right? And the cases should be chosen in such a way that they express the same concepts, right? But they are incredibly different. The way that each case shows up, the concept shows up in very different ways, which I'm sure everybody knows. What intrinsic value is in a business is different depending on the business. What capital allocation looks like is what is good capital allocation depends on the capital environment, depends on the industry, and so on and so forth. Right? So I give you the cases, I ask you to sense make. I give you the expert sense making. I introduce the concept so you have a frame, a skeleton on which you can hang these things. And I keep giving you cases and asking you to sense make, and then giving you the expert's sense making, and then you compare. And sometimes I can give you feedback. Feedback is a bit tricky, so we haven't figured that out. But just this alone, this mechanism alone, will allow you to start seeing like an expert. Yeah. And that's actually what we accomplished in the January round of the course. Like people left the course saying that, I just realized that I used to think that in order to achieve something, I need to set a goal. But entrepreneurs, as you well know, right, the way they deal with uncertainty is that they just act, and then they make sense of the information, and then they change their goals based on what they learn by acting, right? And they're like, oh my God, my entire life I've been always operating under this environment where I need to set a goal and I work backwards and create a plan.
Because that's what they teach you in school. That's what they teach.
Yes, but there is another way of acting. I never realized it until I went through this course and I did this. I give you a situation, right, that the entrepreneur faced, and I ask you to make sense. Like, what will you do, right? And I show you what the entrepreneur did, and then I point out, like, here's the frameworks, here are the logics for why they did what they did, and I give you multiple examples of entrepreneurs. Bill Gates, what do you call it? Bill Gates, Jeff Bezos, the founder of Vanguard. What's his name again? John Bogle, right? I give you all these from different industries, so you cannot say that there's selection bias. You cannot say that it's all from just one period and one type of person, right? Then you start to realize that, actually, if they can do it, I can do that too. Because they also didn't know what was going on. They just did actions and they made sense of the shit that came out.
Even though I do think there's one selection bias in this kind of thing that happens.
Yes.
It's like people choose the people that succeeded. People choose the people that succeeded. And a lot of times, and I told you this before we talked. Podcast episode I interviewed yesterday was a person that did not succeed. I mean, like, he built a business, right? He built a business, but he did not. Right, he had to wind it down. It never got beyond a few millions of dollars and things like that. But there's actually a lot of lessons learned in this things because in successes you see what people did. You did not always see what people did not.
No, I don't agree with that framing. I don't agree that there are. How do I put this? I agree that there are lessons that the person can learn from their experience. I disagree that there are lessons that you can learn from his experience. If you know what I mean. I think I've written. I've written about this before, right?
Yeah. Like, you always like it's the whole biography thing. Like, can you really?
Yes.
Like, what can you learn from biographies of reading people's life? But so I need to. Okay. So I'll caveat what I'm saying. I'm saying there's. You know what? I'll give an example, and you'll help me because you're a better thinker of this than I am. So actually, you probably know this book, right?
Oh yes, of course. Oh my God.
Right.
I've not seen that for a while. So for people who are listening to the audio only, that's
Yeah. The
Can you read it out? Yes.
Yeah, it's the Startup Owner's Manual by Stephen Blank, and Bob Dorf.
Right? Yes.
Yeah. And by the way, it's the second version of this book, actually.
Yes. Legendary.
Legendary.
By the way, for those who are listening, The book that Agaga is holding is 4 Steps to the Epiphany, which is a
The Epiphany.
legendary book by Steve
Yeah.
Blank. It was his first book, actually, and it's
Yeah.
very famous in startup circles, especially around the late 20s.
And I think it's better than this one, Barbara. And I think it's actually better.
I agree. I actually agree with
It's
you.
a lot more.
I
This
prefer.
is principles and this is tactics, and the tactics are very timely, and some of them are just not relevant in today's market. Things like that. But the principles
Okay,
here,
go on.
the principles here.
Universal. Yes.
But I don't know if you like the reason I thought about this book recently, because he starts as a negative example by WebVan. Do you remember that?
Yes, I do. But it was a logical. Sorry, go on.
No, so it's a very interesting, right? It's a very interesting thing, and I think it ties to what I'm trying to say and what you said also about the biographies in a way. Like Steve Blank goes and says, he basically starts with a negative example how Webvan was the most idiotic thing anybody ever did, and if they only followed if only followed the model, like his model, Webvan would not happen. Well, not bad.
Yeah.
You disagreeing with what I'm saying?
No. I think I know where you're going with this, but go on. Like you're gonna have a twist.
And it's a very interesting thing, because it's a point in time, right? Because after the .com bust, like people said, pets.com, that was the most idiotic thing. Webvan, that's the most idiotic thing. People will buy pet food on the internet, on the site, dedicated thing. Like, what? Groceries online? So stupid.
And then,
yes, kids. I think so. It's so interesting. And by the way, I think Steve Blank is genius, and there's a lot to learn from his book and things like that.
yes.
But like I in no way am I trying to compare myself to Steve Blank intellectual powers anywhere. But it's so interesting. So because what is actually the real lesson there, right? What is actually the real lesson there, right? It's like, is it like, what is the lesson of a failure in that case?
There is no lesson. Is my conclusion.
Yes.
There is no lesson, because like clearly Webvan was a good idea if it was in the form of Instacart 2 decades later,
or a
1
different
decade
time,
later.
or if they got more funding, a little here, a little there,
Correct.
smaller market, something, right? Didn't try to grow it, but it's not that the idea itself was stupid, right?
Yes. So okay, I think this is something very important to talk about, and I'm going to address this on 2 levels. So the way that I'm going to set it up is just like Warren Buffett and Charlie Munger and very famous people like Bill Gates, and I don't know, like there's so many people out there who are famous business people and investors, Bill Gates included. Even when he was running Microsoft, they would spend time reading biography. Warren Buffett and Charlie Munger and Bill Gates. And the common rub against reading biography is that, what is there to learn? There is no lesson. It's always idiosyncratic. It's always unique to that particular biographies, that particular person's life and times. What can you learn from Rockefeller? Rockefeller was more than like, hundreds of years ago at this point, right? It's 100 years ago? No. It was turn of the century, so late 1800s, right? So more than 100 years. Okay. So the response to that is that either you are right? And there's survivorship bias and there's selection bias, and there's nothing you can learn from history, nothing you can learn from biography, and therefore all these smart people, Warren Buffett and Charlie Munger, are stupid and wrong. Or but these people are reading it in a different way that doesn't force them to suffer from selection bias or or survivorship bias. And that's one level. And to sort of answer the question, yes, it is possible to read this in a different way from the naive way of learning lessons. And the reason why we want to learn lessons is because that's how we go through life, right? We reflect on our experiences, and then we learn lessons from our experiences. And I'm not saying that that's wrong. I'm saying that, of course, you can learn from your experiences. And that's why I said, with regard to the entrepreneur that you interview, he can learn lessons from his experiences, but we should be very careful not to learn any lessons from his experience. Those lessons are just for him. Instead, when we are looking, and this applies to reading biography, when you're reading biography, you're not reading it for lessons. There are no lessons because it's idiosyncratic. It depends on the person, the time, the environment, the capital environment, the opportunity set. There's no river is the same twice, right? When you step into the river. Instead, what you're looking for when you are reading such biography is you're looking for fragments and concept instantiations that can be used to construct new frames in your environment. Okay, that's very abstract. So let me give a concrete example. If you want to do a scale economy business, right, you should read the biographies of a bunch of people who built scale economy protected businesses. Walmart, Rockefeller, the story of Netflix, right? Yes, and it's all different, but there is a underlying structural pattern in how all of them. I guarantee you, because scale economies is a concept, it's taught in business textbooks, but the way it shows up is incredibly different. You should still read those biographies, and you should be here is one way this can go. So that when you recognize the situation, the opportunity set, right, the details will be different, but the underlying structure, the structure, will still be the same. And you can also recognize it in the wow if you're an investor, right? Like, oh, this business clearly benefits from scale economies because I've seen 10 other examples in different industries across different times, and there is a similarity here. I can't articulate what that similarity is, but my brain can recognize it. So that is why Warren Buffett and Charlie Munger and Bill Gates read biography. They want to calibrate their sense of how these business concepts show up in the real world. It is not enough to read the theory or watch a YouTube video or read the theory in a business school textbook. You need to know how it shows up because it is always varied. It is very different. So that's the first level of my criticism.
Yeah.
The second level is
I want to say something about it. And like I know you're
Yeah.
saying it in this level, right? You're saying it in this level.
Yeah.
But I think anybody that is in the business world and even doing a startup or doing a business or whatever
Yes.
it is, this is actually very, very true almost on everything. Because let's say
Yes.
we talk about marketing. You read the theory about earned media, or you read the theory about or like performance marketing, Facebook, and things like that. But it always starts making like it doesn't actually make sense because it's actually not usable. It's not. I mean, you can read it, but in a way, it's like you can read it, but until you start like going to the nitty gritty components of actually executing this, and it's like, oh, this is actually a personnel issue because if I don't have somebody in the skill set, this doesn't happen. Oh no, it's a copy issue. It's a content creation issue, like whatever it is.
Yes.
Like I don't want like have so many things running through my head right now, just based on things that I had to deal with in the past. Only then does it become useful. But when you collect, let's say, examples of like direct marketing, you collect content marketing, and then suddenly when you start doing things, you can like I don't know, kind of take fragments, like you say, and put things together. So it's true on the most abstract level, but it's also very, very, very true in the domain expertise level when you actually need to execute skill sets in the skills.
Well, I think it's super obvious at the concrete level, right? Because we intuitively start asking other industry peers for like, how do you deal with this marketing problem? And then they give you, and then you go, oh, that's not very useful right now. I can't really apply that to my business. But you keep the fragment at the back of your head. So that in the future, when you're in a similar situation, you're like, oh, Bill once told me that he solved that problem in this way. Let me try, right? We intuitively do this.
And if I can just do, I mean, if I add this component, it might actually work for me.
Yes.
Right. Yeah.
Or we do this when we're learning to date as well. When we're learning to be romantic partners, right? We ask our friends for the stories of like their dates, how they went well, how they went wrong. I love this example, by the way, of talking about dates, because like, how else would you learn? Like, we know not to use logic and to abstract textbooks. We know it doesn't work, but we ask our friends. But we're not going to copy our friends because we're different and they like different people, different things in different people, right?
Yeah.
But we still ask for stories because it was like, okay, so I'm calibrated. Like, what are you getting out of that? You're actually getting calibrated frames, like little fragments that you can put together and like, oh, this date seems quite bad, but John met Mary on a worse date and then now they're happily married. So it might not be the end.
Does your wife know you're trying to optimize the model for dating?
She knows. I've talked to her about like that. Well, because I was not good at dating, right, initially, but luckily she met me after I'd improved somewhat.
So I want to. I cut you off. I cut you off on the first point, but I do want.
Let's do the second point.
I want to go back to the second point, but I just want to say one thing about dating. Being good at dating doesn't mean you're good in relationship. That's two different things.
Yes.
Also,
but it is a skill, and you can suck at dating.
Yes.
And
you can suck at dating and be good in relationships.
Yes.
That's it.
Yes. And in that particular case, you better hope that like your good friends who will introduce you to like a understanding woman, like anyway, understanding partner who you then have a wonderful relationship with. There are many configurations that can work. To bring this back to the criticism of like what can you learn from history, right? It is not true that you can learn nothing, but it is very hard to learn universal principles. So Charlie Munger, if you go to Commoncog and you go to the calibration case method page, so there's a video explaining the calibration case method, and you can click on a link on the front page and it will lead you to an explainer about what it is. So you can watch the YouTube video, but you can also go to the explainer. In that explainer is a quote from Charlie Munger talking about like, how do you make sense of different case studies over time and draw universal principles? And the way that you do it is you ask yourself, why does these companies end up like this? You generate an explanation, and then you try to look for places where the explanation does not apply. If the explanation does not apply, you modify the explanation or you throw it out, and you create a new explanation, and you rinse and repeat. And specifically what you're looking for is the following structure, where X exists, Y may or may not happen.
Yeah.
But if X doesn't exist, Y cannot happen. And this is how you build universal theories based purely on case studies. And Warren Buffett and Charlie Munger have talked many, many times over the years about how when they're looking at businesses, they will usually take a snapshot, right, of the balance sheet, like one in this year one, and then in year 10, and then look at the competitors as well in year 1 and year 10, and sort of ask, what forces led to this pattern? And is it universal? Can I find other businesses where this is true, this is not true? And we want to find situations where I hypothesize this thing was present, and if it wasn't present, the thing would not have happened. Why would not have happened?
Yeah.
So that's how you get generalizable wisdom. You keep asking these questions like, is there a general rule? Can I find a counterexample? But it is very hard. And that is the other approach that Buffett and Charlie Munger do when they're reading all these, annual reports of various businesses over the decades. Anyway, I think that settles like the survivorship. Like, if you get anything out of this call, how to make sense of biography, history, case studies, whether it's, annual reports, financial statements of various companies through time, this is the underlying way. And of course, Commoncog, I'm biased in saying this because Commoncog does the hard work of helping you do the research so that you don't have to go out and spend time finding these things. But fundamentally, this stance is something that you can apply to your work and your life, right? Even if there wasn't Commoncog or something, like somebody doing the research for you. And I think this stance is quite important, because otherwise you would be like those business people that we talk about, where you rode one wave and then you didn't really understand why. And you saw this in some of the Asian tycoons, and then they just did one thing and they got successful, but everything else they tried after that or adjacent to that did not succeed. So that's business expertise in a nutshell.
Now do it today like this.
Yes, so easy.
It's like that. Interesting. So actually comes to something I want to talk to you about, like the things that you experience with your readers and the feedback. So let's say you put out this, right? Let's take out the expertise, because some of the things you put out are, I would say, I don't know, theory, case studies, like big picture. Some things are like, here, go do this, right? Like, I don't know if exactly go do this. Product development elements, accelerated learnings, how Amazon being data driven and things like that.
Yes.
Right. But do people, from your experience, do people actually implement this? Have they implemented successfully? Is it like those who do it successfully? Why have they been successful?
If you're talking about a data-driven series, yes, with a caveat that the big conclusion from that series actually is in order to be successful at using data, you have to have the political will. It has to come from the top down. Your leaders have to buy in to run the company in this way. But there have been cases where it has been successful. It's quite rare because it requires the leadership of the company to believe in this method of running the company and then actually pushing it through. What are some of the other cases? The demand series,
so
I think
we have to say very shortly, like, I know, like, what is the data series and like what's the principles behind it, so people understand.
Gosh, that's it's God. Okay. Amazon is able to look at 400 to 500 metrics in an hour, right? That is not something that they made up. It turns out that there is a long history of using data in a very particular way, and it comes from manufacturing. And if you understand how to use that data in that way, you can begin to use metrics to uncover how your business actually works and uncover exactly which leverage points you can pull to drive the business outcomes that you want. And so the WBR really is a process control tool. It is a control tool to make sure that everybody reporting in the chain of command, right, seeks out and finds things that they can do. They call it controllable input metrics, or levers, I think, where if I push this metric up, I will get good outcomes out the other end, which tends to be free cash flow, right? Well, it's absolute dollar free cash flow, which is what Amazon optimizes for all of its business units. So the process of coming up with what are these metrics, how do I identify them, how do I know that pushing these metrics will lead to the good output metrics that I care about, which eventually ends up in showing up on the income statement in some way. This is what the series is about, breaking these ideas down into very simple, easy to use tools, and then building it back up to like this very complex practice that Amazon does that took them, I think, a decade to get right. So that's the data-driven series. And that one, a lot of people have signed up as Commoncog members because of that. And then some of them churn because they can't apply it to the business because it requires the CEO to drive it. And it requires multiple years to actually build this kind of operational muscle.
And a whole culture build.
Yes.
Yeah.
But the answer is out there. And the most important pieces of that series is actually freely available. You can go read it without signing up. And then you can ask yourself, can I do this in my company? Yeah. So the two most important pieces in that series are, number one, becoming data-driven from first principles, and then the Amazon Weekly Business Review, which if you Google, I think Commoncog is the number one result because it is the best articulation of what it is and how to do it on the internet right now. Yeah. So to answer your question, it depends on the series and it depends on the content. I think there are more people with more success from the demand series, especially if they already have some kind of demand. That means they have some customers and they want to figure out why those customers are buying. Because once you figure out why those customers are buying and who they are, you can start seeking out and finding other customers like them. And this is actually the secret skill, or rather like the foundational skill underneath product and marketing and sales. If you do not have this ability in understanding who your customers are and where do they hang out and why do they buy, then you cannot actually do good sales and good marketing. And people they get more results out of that because that is actually quite easy. I think the feedback loop and the ideas, the concepts are easier to implement because they're within your control. At least if you're inside a marketing department or a sales department. And to be fair, sales,
do it
at
an individual level, right?
Actually, you don't need the series if you're a salesperson because sales is quite good at teaching you frameworks for executing the sales playbook. But marketing people and product people find it helpful, and they tend to get good results once they apply the ideas from that series. And those were the ideas that I just applied to the SaaS company that doubled their ARR. Anyway, I hope that answers your question.
Yeah. So what's the future for you guys?
I don't know. The great thing about Commoncog, I mean, see, the wonderful thing about the business that I've set up for myself is that Commoncog generates cash, right? And it's not a lot of cash, but it frees me up. That's the important thing. In terms of the Pareto frontier of like cash versus time, it frees me up to do business experiments. So I just have to keep doing business experiments. As they put it in, I think the end of the Asian conglomerate series, I sort of talk about it's either business experiments where you originate businesses that throw off cash that are more protected, or you can go and acquire cash generative assets, right? That are undervalued. And I will figure that out, right? There's huge optionality here. And so things that I'm experimenting with, so I'm still changing Commoncog to be case-driven and be effective at it and compelling at it. It's still not as compelling as I would like because then I can hire people to run the business and I can free up my more time that I have to run random business experiments. Business experiments might mean like starting other businesses, most of which has failed, actually, to be honest. But that's not surprising to you or me. You and I both know that like starting businesses are hard. The point is that I can keep trying and eventually something will work.
It matters how much it costs you. It really matters how much it costs you. Yeah, that sort of thing. Yeah.
Yes. Yeah. So that's basically the setup that I have got going for me. It's super interesting. Like right now, I am, for example, I wrote a series on sense making because I've been doing a lot of sense making on AI. I believe that there are opportunities here. I think many people believe that. I also am sense making a lot on crypto because crypto is it's disgusting basically, right? And people don't like crypto. Crypto is it's full of scams, and right now it's the middle of a bear market, which means that there's less noise, which means that there's more interesting signal that you can go and find. Yeah, like who knows what the future may bring. The whole point of entrepreneurship is you improvise based on opportunities you find as you do shit.
Again, it's like in French they say, fuck around and find out.
Yes, 100%. No, and don't die. As long as you don't die, and you can keep,
that's actually
you can keep fucking around and finding out, right? Like as long as you can do this, eventually over the course of your life, you will find something that works, that throws off cash. And it's surprising how much your business is just like this, like putting yourself in a situation where you cannot die and you can try again and again, and you don't have to go get a job.
And then when something works, double down, because that's also the other side of it. When it's like sometimes it's also like it's funny when it's like, so again, I'm guilty of this myself sometimes, and I also seen it another bit. Like something works, but you did not lean to it like it fully, which it usually happens. I mean, we had this discussion earlier on when you sent me like one of the returning things. It's when in startups, I say it a lot. Like startups, if they're bootstrapped or not, like again, whatever we're doing, it's not working. It's not working. It's not working because any of the many reasons. They didn't actually, they didn't have the product market fit. They thought they had something, whatever. And then the side hustle of the side hustle or one feature actually start making money. Now, in this podcast, we had 3 or 4 that like went from nothing happened year 1, year 2, nothing's happened, and this like feature became a business, like a nice business or a very significant growth business. So, for example, I had an entrepreneur. They basically built a bank for a bank for freelancers. They said that's what we want to be, the bank of freelancers, and we do all those things, and then fraud, because it's damn hard to be a bank in a startup, right? It's like it's that. And then they had this feature that basically was like a Zapier or Made.com for your business decisions.
Oh,
like
God.
if this,
And
this
then
money
it took
comes
off.
and then they like basically, it was a very interesting survey. They had 83 investors. They had to sign up everybody. They recapitalized the company, and now they're like a multi-million ARR, like growing. Just a moment. And now, of course, they added AI, and it's like more complex. But basically, you can basically have your own CFO kind of thing, right? And that's a positive example. But for example, in my previous company, one of my previous companies that I did, like raised a few millions, burned them, no product market fit. Again, I'm crying inside. I don't know if you can see it from my manly look. And then the marketing became the business because we got really good at getting people to create UGC before this was a thing. And then we found ourselves doing very complex UGC projects for the top consumer goods companies in the world, and of course smaller things like that. But it took us like a year to update the website. And we were making money by this, but the website said one thing and the money was coming.
Yes.
I'm talking like millions of dollars were coming from somewhere. And like, if you went to our website, you would not know this. That's how we were making millions of dollars a year. You would not know this, right?
Oh my goodness, yeah.
And it took me like a year to update the website. So, and I'm saying, I'm not going to ban
but who
anybody
cared,
else, but
right?
that's me. Yeah,
who cares?
But we missed, when other people came in, and we could have doubled down and done.
That's true. Actually, this was my experience as well, right? With the point of sale company. In no universe did my boss or I thought that we would be running a point of sale company that would be so successful, that we would be making so much money, right? Compared to the outsource. We knew we wanted to build a product company. We built like a CRM for insurance agents that went nowhere. We built a whole bunch of random things that didn't succeed.
Yeah.
And so the point of sale business worked, and my boss, to his credit, said, let's go all in and let's just double down.
Yeah.
But I also think maybe it's after you see a couple of this, you've been in startups for a bit, you see this pattern again and again.
Yes, again.
You get better at just burning the boats, so to speak.
Yeah.
So don't be surprised if like Commoncog, I'll be like, oh, I'm just gonna move on to like the big opportunity. But of course, ideally, I would want it to be a self-sustaining thing that runs in the background, right? But it's not surprising if I discover this, and in fact, you would probably just go, of course you would, right? Because that's what happens in startups. It can happen. It can happen. It has happened before. It can happen to anyone. I think it's interesting as that, as I'm listening to you, I think my failure mode wouldn't be burning the boats and accepting that, hey, this is working. I think my failure mode is not doing enough random shit because this is my personality. I am very happy if you give me like a working business, I would just double down. I will operationalize the shit out of it. It will run very well.
Yeah.
And that's what I did in my previous company. That's what I did with the B2B SaaS. But we all have weaknesses. My weakness is to be more chaotic, as my friend talks about this, chaos versus conscientiousness. I am very conscientious, and I need to be reminded I also need chaos.
Yeah.
And whereas there are entrepreneurs who are like super, they do a lot of random things, but they're not very good at like dialing it in. So anyway, just reflecting on what you're saying, I think the danger for me is I'm not doing enough random things that eventually something might work.
Yeah.
So yeah.
Amazing.
I'm sure I don't think you have that problem.
I err on both sides, I have to say. I switched on both sides. I've done both. I'm now more on the random shit stuff. A little more on the random
That's really good.
Yeah.
I admire people. Like, I admire my boss for doing random shit now. It was a bit too chaotic when I was working with him, but then now with a bit more time and experience, I was like, yeah, actually it plays a role. And it makes sense now why he and I worked well together. We worked well together, although he assumed that I would I was the no guy. So every time I said yes to an opportunity, he was very surprised. But he didn't realize that it was the dynamic, right? He would go and
Yeah.
start some crazy thing that barely worked, and then I will come in and then I'll make it work.
Work, yeah.
And that's why the business worked between the two of
Yeah.
us. But anyway, yeah.
Amazing. Cedric, I think it's a good point for us to wrap up.
Cool.
So for people who want to reach you, where can they find you? Where should they go?
Go to commoncog.com, sign up for the newsletter, or sign up actually there's a free email course that explains the pedagogy, the calibration case method that's adapted from this accelerated expertise thing that we've talked about, right? It's a pretty educational email course that is written in a simple way so you understand this method. And then you don't really even have to subscribe to Commoncog to benefit from the method. You can start applying it to your own reading, to your own information consumption in your own business context. But yeah, commoncog.com, that's common and COG. And yeah, I think all the important things will be there. It's very low noise, very high signal, maybe a bit too high signal. And I think one change that will happen, we're putting the finishing touches on this. It turns out there's a lot of engineering involved, is that Commoncog will switch to an audio first format. So you can listen to all the articles, so you don't have to find time in your day to read the cases or the articles. So you can be driving and collect a fragment of a business concept as you're listening to a case while you're driving, for example. Anyway, that's coming up. That's the thing that it's slow going because being a new father, you adjust to not being able to work that as much for the first few years.
Yeah. Cedric, always a pleasure. Thank you very much for a very interesting conversation.
Thank you for inviting me. This was great.
Cedric, cheers.
Yeah, cheers. It was the first podcast that I've ever done since I had my daughter. Wow.
Amazing. Two exclusives.
Yeah. Yeah. It's what a pleasure. What a pleasure to talk about these topics again.
Amazing. Cheers.
It's a wrap. This Ageas podcast episode ends here, but you don't. Now, is it crazy to think that you know somebody who'd love this episode? Share it with them, and they'll love you for it.